Well, hello and welcome once again to Beat the Reset. My name is Tim and I am the guy in the hat, and today I have with me my very good friend and associate Sam from Adams Bullion. How are you, Sam?
Really well, thanks, Tim. Great to be with you as always. What about yourself?
Mate, I'm always good, and even better, of course, for seeing your lovely self. And today we're going to be talking about a really interesting topic to do with trading in risk and emotion and all the things that go around trading, and those feelings that people get of uncertainty and euphoria. You can go from this feeling of euphoria one day to a feeling of, putting a rope around your neck the next. But before we get into that, can you just give us a bit of a background, just a very quick sort of brief background, so that the new listeners to the channel know who you are and what it is you do? Over to you, Sam.
Yeah, absolutely. So my name's Sam Lawrie. I am the operational director here at Adams Bullion. I've had a background in financial services for a while now. So I initially started off at an algorithmic trading firm when I got out of uni. So building algorithms that trade the markets for clients. After that, I started working at a CFD broker, so that's contracts for difference. It's leverage trading, so I've got a background in trading. After that, I started working for an equities analysis company, so helping clients analyze which stocks to add to their portfolio. After that, another CFD broker, so again, I've got lots of experience working in trading of the markets. And then after that, it was setting up this business and, bullion. So I've got, that background in trading. I was a trader before I was a stacker. I started trading gold with CFDs back in 2018 and then started buying bullion after that. So I came in on the dark horse, and then I saw the light. So that's my background. I still trade to today. I like to trade different markets. Commodities are probably my favorite, but I also do like to trade stocks and crypto as well. I've been trading the markets for a while now.
Yeah. So now you switched into physical metals and physical silver. Mm-hmm. And before we get into our topic, why did you make that switch? Well, what is it about the physical market that you like so much?
Yeah, so essentially it comes down to counterparty risk. When I was trading CFDs on gold with CFD brokers, I realised pretty quickly that I was taking on a lot of counterparty risk with the broker. Now, look, for most of the time, that's no trouble at all. Most of the time, brokers don't go down. But when the markets go really crazy, brokers have gone down in the past. And, in that scenario, even if you had the right trade on, you wouldn't be paid out on it. Which, when you're trading gold and, you're looking at the kind of things that you and I look at, the idea of something crazy in the markets playing out and you not getting paid out on the right bet, that really didn't sit well with me. I thought, no, I need to eliminate some counterparty risk here, make sure that, I get paid out at the end, and that's where physical comes in. You're not taking any counterparty risk with any broker. If all the world's brokers went down all at once and you're holding physical, it wouldn't matter to you. So that's what really drew me to physical, was the world started going a bit crazy, and I thought, you know what, I really need to eliminate counterparty risk here.
And that leads us beautifully into our topic, which is to do with risk and to do with this idea of emotion. And so where I want to start this conversation is, this has been brought about by people that are getting into this idea of buying gold and silver, and it's really, for some people, their first soiree into investing. And you've done a lot of trading and a lot of investing, so you're used to volatility, you're used to risk. But I wanted you to kind of share with the audience this idea of when markets are going up, it's great, everyone's a winner, right? It's like no one's going to get, everyone's going to be happy about that. But what is your view? And I want you to share your deep views, because you're experienced at this. When you see market downturn, especially, let's just talk about gold and silver per se, physical metals, when the market starts to turn down, how can you share your experience as a trader? What do you see? What do you want to tell people here who aren't used to this?
Yeah, so what a question. I'm going to start off with the emotional side of it, and then we can step from there. So, look, the first thing to think about with trading is that your emotions will always work against you. Look, like you say, on the way up, everyone's happy, everyone's smiling, everyone's clapping, everyone's feeling great about the investments they've made. Now, if you're sitting on the sidelines and you haven't made the investment, maybe you're thinking, oh, I'm missing out here, I need to get in, so it might not be as fun for you, but at least for everyone holding, it's a great time. Now, on the way down, when we're having pullbacks, which, look, let's be honest, pullbacks are natural in the market. No market in the world moves upwards in just a straight line. There's always little pullbacks along the way, even in a bull market. But on the pullbacks, your natural emotions will be, oh, this isn't good. Oh, my stack's worth less money than it was yesterday. Oh, did I make the right decision? Oh, and frankly speaking, those emotions that you're feeling right there, you need to get rid of them. They're not going to make you any money. They're going to lose you money, actually, if you listen to them. And what you need to do, there's a lot of wisdom out there from big market guys, Warren Buffett, Charlie Munger, all these guys, and they all say the same thing. When there's blood in the streets, be out buying, is what they say. Buying dips, there's another saying, which is when everybody else is feeling fearful, you should be feeling greedy, and vice versa, the other way around as well. And that's the nature of buying pullbacks. Is your emotions will tell you, hey, did you make a mistake? Did you make the right move? But logically, you should be thinking to yourself, well, I love the asset when it was at a higher price, and now the asset's at a lower price, so I should like it even more. I'll use an example here. Say you go into your favourite store for jeans, let's just say. You're going jeans shopping. Okay, and you love this pair of Levi's, for example. This pair of Levi's, you've had your eyes on it for a few weeks now. You go in, the jeans are 50% off. What do? Walk out and start crying? No, you buy two pairs. And that's the same with the markets. Whenever you see a dip, you should buy the dip because you've got that long-term investment mindset. You know where the asset's going to go in the long term because you've done the research, you've done the study, you understand why it moves, and you just treat the dip as a buying opportunity, an opportunity to get your favourite asset at a discounted price. Same thing with those Levi jeans.
Yeah, and you mentioned the word research. You've done the research, and this is really critical here because, I've got clients, and you may have it too, that are new to gold and silver. They're new to investing entirely. All they've ever done is buy real estate. That was it, and usually that's because they wanted to live in the house. Mm-hmm. The question is, with the when they see the markets drop, I guess their emotion is reliant on our research. So your and my research as, kind of advisors. Mm-hmm. And their first emotion is market's falling, got to get rid of it, got to get rid of it, got to get rid of it.
Yep.
So my question really is this just a natural human response? Is this fairly normal? Is this what you've seen a lot of guys trading in your life. Is this normal human emotion? And is this something we just need to get used to in the marketplace? What's your view on that?
Absolutely. It is completely natural. I mean, the way I think about it is it's pain. So when you're watching your portfolio fall in value day after day, it's pain. You're feeling pain. And when you're in the normal world and you feel pain, it's a signal to your brain to stop what you're doing. So when you put your hand on a hot stove and you feel sharp burning pain in your fingers, the natural and correct response is to take your fingers off the hot stove. In investing, things are very different.
So is there a way for people to kind of like numb that pain a bit?
Yeah, absolutely. I mean, one of the things with trading, and I'll say this to anybody, the hardest part about trading is mastering your own emotions. When I first started off in trading, I got in a couple of great trades and then got out of them because of emotion. I read something somewhere that made me have a little bit of doubt. I hopped out of the trade, and I tell you what, today I regret that. Deeply regret it. To give you an idea, when I first started trading CFDs on gold, it was $1,200 an ounce. Today, we're at $2,300 even after this little pullback. Now, if I had just popped the trade on at $1,200 and left it on for the 6 years that I've been in the markets, I would be up significantly. The only thing that stopped me was fear. Now, mastering that fear on pullbacks is one thing, and it's very important. As I said, it's the hardest part of trading is mastering your own emotions.
So this is really where it lives and dies for me, in this moment of fear. there's a moment at which you think, if I stay in the trade, it could turn and go up.
Mm-hmm.
But if I stay in the trade, it could just tank.
Mm-hmm.
How do you master that moment? What is the key to that? Like, is this go have some coffees, go work out at the gym, go for a walk, take a deep breath, go reread the markets? How do you get over that moment?
It's funny you say those things because I think they are remarkably true. Look, mastering emotions in markets does require lifestyle. So a healthy lifestyle, eating right, going to the gym, taking your stress out on something, whether it be a punching bag or a set of weights, or making sure, even taking some time away from the screens if you have to, and just touch grass, go out into nature, just remember what the world's like outside of the financial markets. All of these are great ways to manage the stress of trading. Particularly when you're trading with very large size. I've got friends of mine who their portfolio will swing hundreds of thousands of dollars in a day. How do you deal with that? Imagine you wake up and your portfolio's worth $150,000 less than it was yesterday. How do you deal with that emotionally? What do? You have a shot of whiskey in the morning? Do you go to the gym? What do you do? And the answer is, look, I would not go for the shot of whiskey, let's be honest. But the answer is to take a step back from the keyboard, remember why you're holding the assets that you're holding. There's a great saying in the markets, when in doubt, zoom out.
Wow.
And I say this with my clients all the time. When people come in to buy bullion from me for the first time and I show them the Australian dollar gold price chart going back to the early 2000s, look, over the long term, it is just one big trend upwards. But if you zoom in, there are drops. So an example I'll talk about, when I first started selling bullion, physical bullion, back in 2020, the gold price in August of 2020 to March of 2021, it dropped 23% in Aussie dollars. It was a big drop at the time. And I remember speaking to clients on the phone, some of them asking, Sam, when is this going to stop dropping? I can't take it. And to anybody that's sold at the bottom of that drop, you would have missed out on a 60% increase from there over the space of 3 years. Call it 20% a year, because you sold on fear. Now, if you reverse that, if you saw gold, your favorite asset, drop 23% and you bought it, you bought the dip, well, you would have made 60% in 3 years.
Yes. So there are two types of people on that market you just mentioned when it's tanked out at, you said it dropped 23%. There's two types of people. Mm-hmm. One person decided to hold on to their asset and the other decided to sell.
Yep. What
is the difference between those two people?
I put the difference down, and again, this goes back to research, understanding the asset you're holding. I put it down to those who are governed by their emotions versus those who are governed by their more logical processes in their mind. And the reason I say that is, again, going back to the pain example, if you've bought $100,000 of gold at the top, and now it's worth $23,000 less than you bought it for, and then you sell it because you think, oh, this is such a bad investment. Why did I ever buy this? You're doing it out of emotion. But if you watch your favorite asset drop by 23%, and just like the jeans, you go in and you buy 2 pairs, that's the logic in you speaking. That's you taking your emotions out the back, burying them in a hole, and then doing business with your logic. And that leads to much, much better investment outcomes than the other way around.
Yeah, and I guess the other question I've got here, just before we sort of finish on this, is research. How much does research play a part in investing?
And research is everything. Knowing what to buy, when to hold it, and having the confidence to hold through little pullbacks is everything. And that's why what you do, Tim, with all of your research work is so important. You're giving people the knowledge that they need to hold throughout these little dips. And going back to those investment outcomes, it leads to much, much superior investment outcomes when you've got that research behind you.
Yeah, and because the world's full of people now that says I should have bought Bitcoin at in 2009, right?
Mm-hmm.
Hindsight's an amazing thing, and that's the other thing about these markets is that hindsight tends to people always say I wish I'd, and that moment of fear, everything that happens in that I wish I'd is in that exact moment of fear. Well, I mean, this has been an amazing conversation, Sam. We're going to get you on to do a whole lot more of these, and your knowledge, I mean, as a trader, that's all you do is live and breathe trade. So you're an emotional, things are up, things are down, but you're a very happy guy. So obviously it hasn't destroyed you as a human.
No. Look, the thing is, I have good days on the markets. I've had bad days on the markets, and you can't let either one of them get to you. If you're truly done the research in what you're holding and you know what it's going to do moving forward, then the down days shouldn't affect you at all. You should be thinking, wow, I've just got the opportunity to buy a dip. I mean, If you like the asset at $3,800 an ounce Aussie, you should like it even more at $3,500 an ounce Aussie.
Yeah, absolutely. Well, that's it, of course. Sam from Adams Bullion, of course, in Melbourne, and level 3, 257 Collins Street. If you're looking for precious metals, of course, gold and silver and platinum as well. He holds the XAG, XAU, and XPT brands, and well worth a look. In my opinion, the best trader in Melbourne on Collins Street, the Wolf of Collins Street, Sam. Anyway, that's it from me, of course. The guy in the hat, of course, signing off on another podcast. I hope you've enjoyed this one. It's amazing to get this information direct from the source. That's it for me. Hope you're looking after your health. Hope you're looking after your wealth and your families. And as always, make good choices.